Why are the world's central banks buying massive amounts of physical gold, while simultaneously telling everyone that fiat currency systems are stable? If modern money is backed only by government trust, then why are nations quietly stockpiling thousands of tons of gold? Something unusual is happening in the global financial system, and central banks may be preparing for a future most people aren't paying attention to. Today we're breaking down why central banks are aggressively accumulating gold, what they know about fiat currencies, and what this could mean for the future of the global economy. First, let's understand fiat money. A fiat currency is money that has value because governments declare it legal tender. It is not backed by gold or silver. The US dollar officially became a pure fiat currency in 1971. When President Richard Nixon ended the dollar's convertibility into gold. Since then, most global currencies have operated the same way. Modern money is backed primarily by trust, taxation, government power, and economic confidence. And under this system, central banks can create money digitally or physically whenever needed. That flexibility helps governments stimulate economies during crises. But it also creates long-term risks. Gold is fundamentally different from fiat currency. You cannot print gold. You cannot create it with a keystroke. And unlike paper currency, gold has maintained purchasing power for thousands of years. Civilizations have collapsed, empires have disappeared, currencies have failed. But gold has remained valuable across nearly every era of human history. That's why central banks still treat gold as a strategic reserve asset. Because gold carries something fiat currencies do not. No counterparty risk. A dollar depends on the credibility of the US government. A bond depends on repayment. A bank deposit depends on the banking system. But physical gold, held in a vault, belongs entirely to the owner. No promises required. In recent years, global central banks have been buying gold at some of the fastest rates in modern history. Countries like China, Russia, India, and several Middle Eastern nations have dramatically expanded their reserves. Why? Because many governments are becoming increasingly concerned about inflation, rising global debt, currency instability, and geopolitical conflict. But there's another major reason: control. Many nations no longer want to rely entirely on the US dollar system. Gold gives countries a reserve asset outside another nation's control. And after sanctions froze portions of Russian foreign reserves in 2022, many governments realized something important. Foreign reserves held in another country's financial system can become vulnerable during geopolitical conflict. Gold, stored domestically, avoids that risk. This raises an uncomfortable question. If central banks truly believed fiat systems were perfectly secure, why would they need so much gold? The answer is nuanced. Central banks are not necessarily expecting the collapse of fiat currencies, but they do understand the weaknesses built into debt-based monetary systems. Global debt levels are now historically massive. Governments continue expanding deficits, and many economies depend heavily on low interest rates and money creation. Gold acts as financial insurance against systemic instability. It protects against inflation, sovereign debt crises, banking instability, currency devaluation, and geopolitical fragmentation. In other words, the institutions running fiat systems are simultaneously hedging against the risks of those same systems. That tells us something important. Gold is no longer just a relic of the past. It is quietly becoming strategic again. The global monetary system may be entering a transition period. We're seeing central bank digital currencies, regional trade alliances, reduced dependence on the dollar in some regions, and growing discussions about alternative settlement systems. That does not necessarily mean the world is returning to a gold standard. Modern economies are too large and debt-driven for a traditional gold-backed system to function easily. But gold may increasingly serve as neutral collateral, sovereign insurance, and a trusted reserve asset in a more multipolar financial world. So while the public focuses on digital banking and paper money, central banks are quietly accumulating one of the oldest forms of wealth in human history. And when the people managing fiat systems start aggressively buying gold, the rest of the world tends to pay attention. What do you think? Is gold becoming important again? Or are central banks simply preparing for uncertainty? Let us know in the comments. And if you enjoyed this video, subscribe for more deep dives into economics, finance, and the hidden forces shaping the global economy.